Trading isn't what most people think it is. When you first get into this world, you imagine yourself glued to multiple screens, clicking buttons rapidly, making split-second decisions that turn into instant profits. You picture the adrenaline, the constant action, the thrill of being in the market every single moment. But here's the truth that took me years to understand and even longer to accept. The best traders in the world spend most of their time doing absolutely nothing. I know how that sounds. It sounds boring. It sounds like a waste of time. It sounds like you're missing opportunities while the market moves without you. But that feeling, that exact feeling of needing to be involved in every move, is precisely what separates profitable traders from those who keep losing money. The market doesn't reward activity. It rewards patience, discipline, and the ability to wait for the right moment. Think about a lion hunting on the African savanna. That lion doesn't chase every animal it sees. It can go days without making a kill. It watches, it waits, it conserves its energy, and when the perfect moment arrives, when a weak or isolated prey comes within striking distance, that's when it acts. The lion succeeds not because of constant action, but because of patient observation followed by decisive execution. Trading works exactly the same way. When I started trading, I made every mistake you can imagine. I'd open my trading platform first thing in the morning and immediately start looking for trades. If I didn't have a position by 10 in the morning, I felt like I was falling behind. If the market moved and I wasn't in it, I felt like I was losing money even though I hadn't actually lost anything. This mentality destroyed my account more times than I care to admit. I was bleeding money not because I didn't understand technical analysis or because I couldn't spot patterns, but because I couldn't sit still. I couldn't do nothing. The financial markets are open for many hours each day, and they move constantly. Prices go up and down, candles form, indicators fluctuate, and there's always something happening. But here's what nobody tells beginners. Most of that movement is noise. Most of those price changes don't represent real opportunities. They're just the market breathing, moving between levels, working through normal volatility. The actual high-probability setups, the moments where the odds are genuinely in your favor, those moments are rare. They might happen once a day. They might happen once a week. Sometimes they don't happen at all for extended periods. Professional traders understand this deeply. They have their criteria, their specific setups they're looking for, and they wait. They can watch the market all day and close their platform without taking a single trade, and they're completely fine with that. In fact, they're happy about it because they know they preserved their capital. They didn't force anything. They didn't try to make the market give them something it wasn't offering. Amateur traders, on the other hand, feel like they failed if they didn't trade. They measure their day by how many positions they opened rather than by whether they followed their plan. Let me explain something about probability that changed my entire approach to trading. Every trading strategy has a win rate. Let's say your strategy wins 60% of the time when you follow it perfectly and only take the setups that match your criteria exactly. That's a profitable edge. Over 100 trades, you should win about 60 of them. But what happens when you start taking trades that almost match your criteria? What happens when you take setups that are close, but not quite right because you're bored or because you feel like you need to be doing something? Your win rate drops. Maybe it drops to 50%. Maybe it drops to 40%. Suddenly, your profitable strategy becomes a losing strategy, not because the strategy itself failed, but because you couldn't wait for the real signals. The market will tempt you constantly. You'll see a chart that looks pretty good. Not perfect, but pretty good. Your indicators will be aligned, but maybe not quite at the levels you normally wait for. The price will be near a support or resistance zone, but not exactly touching it. And you'll think to yourself, this could work. I could get in here and catch the move. Sometimes it will work. That's the dangerous part. Sometimes those almost right setups will turn into winners, and when they do, they reinforce the wrong behavior. They make you think you can be flexible with your rules. They make you believe you can trade more frequently without consequences. But over time, over dozens and hundreds of trades, the numbers don't lie. If you took 100 trades that perfectly matched your criteria and 100 trades that almost matched your criteria, the difference in results would be dramatic. The high-quality setups would make you money. The almost right setups would cost you money. And all that time you spent in those marginal trades, all that stress and screen time and emotional energy, it would have been better spent doing literally nothing. I want you to understand something about waiting and trading. It's not passive. It's not lazy. Waiting is an active skill. When you're waiting properly, you're watching the market, you're analyzing what's happening, you're staying aware of the broader context. You're tracking key levels, monitoring for news or events that might impact your trading, reviewing your past trades to improve your edge. You're doing everything a trader should do except clicking the buy or sell button. And that restraint, that ability to observe without acting, is one of the hardest skills to develop. Our brains aren't wired for this kind of patience. We're wired for action. When we see an opportunity, even a perceived opportunity, our instinct is to seize it immediately. We're afraid it will disappear. We're afraid we'll miss out. In trading, this fear of missing out has its own acronym because it's so common and so destructive. Traders call it FOMO, and it's responsible for more losses than almost any other psychological factor. You see a stock running up and you think you need to jump in right now, or you'll miss the entire move. You see other traders posting their wins on social media, and you feel like you're being left behind. So you take a trade you shouldn't take, and more often than not, you end up losing money. The irony is that by trying not to miss out, you actually create the losses you were trying to avoid. If you had simply waited, if you had let that move happen without you and continued watching for your actual setup, you would have preserved your capital and been ready when a real opportunity appeared. But because you acted on impulse, on emotion, on FOMO, you now have a losing position that's tying up your capital and your mental energy. Great traders develop what I call selective aggression. They're incredibly passive most of the time. They watch, they wait, they do nothing. But when their setup appears, when all their criteria are met, they act decisively and without hesitation. They're not timid or fearful in that moment. They execute their plan with full conviction because they've waited for the right opportunity. This combination of extreme patience followed by confident execution is what generates consistent profits. Think about what happens in your mind when you're overtrading. You open a position. Now you're worried about that position. Will it go your way? Should you move your stop loss? Should you take profits early? You're stressed. Your attention is divided. Then maybe that trade goes against you and you close it for a loss. Now you're upset. You want to make that money back immediately. So you look for another trade right away, but you're not calm and objective anymore. You're emotional. You're in revenge trading mode. You take another suboptimal setup and maybe that one loses too. Now you're in a hole, and the whole time, you've been acting instead of waiting. You've been fighting the market instead of letting it come to you. Compare that experience to a trader who waited. They watched the same market movements you did, but they didn't take any of those marginal setups. They weren't stressed about open positions. They weren't dealing with losses. Their mind was clear. They were patient. And then their setup appeared. Maybe it was later that day, maybe it was the next day, but when it showed up, they recognized it immediately because they were watching properly. They entered with a calm mind, with confidence in their plan, and without the emotional baggage of previous losses. Which trader do you think has better odds of success? The concept of doing nothing in trading also relates to something called opportunity cost. Every dollar you have is a dollar you can deploy into the market when the right opportunity appears. But if that dollar is currently tied up in a mediocre trade, it's not available. You might have $3,000 in your trading account. If you spread that across 6 different positions that were all just okay setups, you might have $500 in each. Now your dream setup appears, the one you've been waiting for, but you only have $500 available to put into it instead of $3,000. You limited your upside on a high probability trade because you were too busy taking low probability trades. Professional traders often talk about capital preservation as if it's a defensive strategy, but it's actually offensive. By keeping your capital intact and available, you're ensuring that when the perfect pitch comes, you can swing with everything you've got. You can size your position appropriately. You can maximize the edge when it's truly there. This only works if you spend most of your time out of the market, doing nothing, waiting. I learned one of my most valuable trading lessons from a mentor who managed a significant amount of money. He told me that his fund's returns weren't built on making money every day or every week. They were built on a handful of exceptional trades each year. Maybe 10 trades out of hundreds of opportunities they evaluated would account for most of their annual profits. The key was being patient enough to wait for those 10 trades and disciplined enough to avoid all the traps in between. He said that any amateur with a bit of knowledge could probably identify those same 10 opportunities, But what separated professionals from amateurs was that professionals only took those 10 trades while amateurs took 50 or 100 trades, diluting their winners with far too many losers. This insight completely changed how I viewed my trading journal. I stopped measuring my success by how active I was. I stopped feeling guilty about days where I didn't trade. Instead, I started evaluating whether the trades I did take met my criteria. I started focusing on quality over quantity. My win rate improved dramatically. My stress levels dropped. My account started growing consistently. And I was spending less time actually in positions and more time waiting. Waiting also gives you perspective. When you're constantly in the market, constantly managing positions, you lose the big picture. You get zoomed in on every minor fluctuation. You become reactive instead of strategic. But when you spend time watching without participating, you start to see patterns you missed before. You notice how price behaves at certain levels. You see how the market tends to move after specific events. You understand the rhythm and the flow. This knowledge only comes from observation, not from action. There's a famous quote in trading that says the market can remain irrational longer than you can remain solvent. This is especially true when you're fighting the market, when you're trying to force trades, when you're not willing to wait. You might see what you think is an obvious setup. The market should go up from here, you think. So you buy? But the market doesn't care what you think should happen. It does what it does. And if you're in a position while it does something unexpected, you're losing money. But if you were patient, if you waited for confirmation, if you let the market prove itself first, you would have avoided that loss entirely. Patience in trading isn't just about waiting for entry points. It's also about waiting for exits. So many traders get into a good position, a position that's starting to work, and then they can't stand the tension of watching it move in their favor. They take profits way too early because they're afraid the market will reverse. They can't do nothing while they're in a winning trade. They need to act, to lock in something, to feel like they've accomplished something. But by taking profits prematurely, they limit their gains on their best trades. Over time, this creates a situation where their average winner is small and their average loser is relatively large because they cut winners short but let losers run. The right approach is the opposite. You should let your winners run and cut your losers short. But doing this requires incredible patience. When you're in a winning trade, you have to do nothing. You have to trust your plan. You have to let the market go where it wants to go without interfering. This is just as hard as waiting for the right entry. Maybe harder, because now you have profits on the screen that could disappear. But professional traders know that their few big winners need to be truly big to offset their inevitable small losses. They can't afford to micromanage profitable trades. I remember a trade I took in a stock that had broken out above a major resistance level. Everything lined up perfectly. I entered with a clear plan. Hold until the next significant resistance level, which was about 30% higher. The trade immediately moved in my favor. Within 2 days, I was up 8%. My brain started doing calculations. 8% is great, it said. Take the profit. Lock it in. But my plan said to hold for the bigger move. So I did nothing. I didn't touch the position. It was agonizing. The stock would go up, and I'd feel smart. Then it would pull back slightly, and I'd feel stupid for not taking the 8%. This mental battle continued for 2 weeks. But I stuck to my plan. I did nothing except watch and trust my analysis. Eventually, the stock reached my target, and I exited with a 28% gain. If I had taken that early profit, I would have walked away with less than a third of what I ultimately made. The only reason I captured that full move was because I had the patience to do nothing while the trade worked. I didn't try to outsmart my plan. I didn't let fear of losing my profits make me act prematurely. I waited. This experience taught me that patience isn't a one-time thing. It's not just about waiting to enter a trade. It's a continuous requirement throughout the entire trading process. You need patience to wait for setups. You need patience to let winners run. You need patience to stay out of the market when conditions aren't favorable. You need patience to rebuild after losses. Trading is patience stacked on top of more patience, all the way down. A lot of newer traders struggle with this because they come to trading looking for excitement. They want action and adrenaline. They've maybe gambled before, or they've seen movies about trading where everything is fast-paced and dramatic. But the reality is that profitable trading is boring most of the time. It's watching charts with nothing happening. It's reviewing the same levels over and over. It's saying no to dozens of potential trades because they don't quite meet your standards. The excitement comes from the results, from watching your account grow over time, not from the day-to-day activity. If you need excitement and action, trading is not the place to find it. You should find that somewhere else in your life. When you sit down to trade, you should be calm, patient, and focused. You should be like a sniper, not a machine gunner. A machine gunner sprays bullets everywhere hoping to hit something. A sniper takes one carefully aimed shot after hours of waiting in position. In trading, the sniper wins every time. Another aspect of patience that doesn't get discussed enough is patience with your own development. Learning to trade well takes time. It takes years, not weeks or months. You're going to make mistakes. You're going to lose money. You're going to have periods where nothing seems to work. During these times, you need the patience to keep learning, to keep reviewing your trades, to keep refining your approach without giving up. Most people quit trading not because they couldn't learn the skills, but because they didn't have the patience to go through the learning process. They wanted instant results, and when trading didn't deliver that, they moved on to something else. But think about any other skilled profession. Would you expect to become a surgeon after reading a few books? Would you expect to become a concert pianist after practicing for a couple months? Of course not. These things take dedicated practice over extended periods. Trading is no different. The skills you need, the pattern recognition, the emotional control, the discipline, these all develop slowly through experience. You can't rush it. You can only show up consistently, put in the work, and be patient with yourself as you improve. The market itself teaches patience if you let it. Every time you force a trade and lose money, the market is telling you to be more selective. Every time you exit a winner too early and watch it continue moving without you, the market is teaching you to be more patient with your exits. Every time you chase a move and get caught in a reversal, the market is showing you the cost of impatience. These lessons can be expensive, but they're valuable if you're willing to learn from them instead of just getting frustrated and repeating the same mistakes. I've noticed that the traders who succeed long-term share a common characteristic. They've all made peace with doing nothing. They're not uncomfortable with inactivity. They don't need to prove anything to anyone by being busy. They understand that their job isn't to trade as much as possible, but to make money. And sometimes making money means not trading at all. They've internalized the idea that preservation of capital is just as important as growth of capital. There's also a practical element to patience that relates to execution quality. When you're patient, when you wait for your setup and then execute, you're calm. Your hands are steady. You place your orders correctly. You set your stops and targets where they should be according to your plan. But when you're rushing, when you're emotional, when you're forcing trades, you make execution errors. You click the wrong button. You forget to set a stop loss. You enter at a worse price because you're in a hurry. These small mistakes add up, and they're all the result of impatience. The concept of doing nothing also extends to avoiding the temptation to constantly adjust your strategy. New traders tend to switch strategies constantly. They'll try one approach for a week, and if it doesn't work immediately, they abandon it for something else. They're always looking for the perfect system, the holy grail that will make trading easy. But the truth is that most reasonable trading strategies can be profitable if followed consistently. The problem isn't the strategy, it's the inability to stick with it long enough to see results. This requires patience at a meta level, patience with your chosen approach, trusting that if you follow it correctly over many trades, the edge will reveal itself. I spent nearly 2 years refining and sticking with one particular strategy before I felt I had truly mastered it. During that time, there were months where it didn't work well. There were periods where I questioned whether I should try something different. But I committed to giving it a fair chance, which meant at least a few hundred trades under various market conditions. By the end of that process, I understood not just the mechanics of the strategy, but its nuances. I knew when it worked best and when to step aside. That knowledge only came from patient, consistent application. Risk management is another area where patience plays a crucial role. Proper position sizing means you're not risking too much on any single trade. But when you're patient and selective, taking only the best setups, it becomes much easier to maintain proper risk management. You're not in a rush to deploy all your capital. You're not over-leveraged across multiple positions. You have the luxury of sizing appropriately because you know another opportunity will come along eventually if this one doesn't work out. Impatient traders often violate risk management rules because they feel pressure to make money quickly. They risk too much on mediocre setups because they can't wait for better ones. The waiting game in trading also teaches you about yourself. It reveals your relationship with boredom, with patience, with the need for stimulation. Some people discover they simply can't sit still. They need constant activity. If that's you, it's valuable information. Maybe very short-term trading styles like scalping would suit you better, though even those require patience in their own way. Or maybe trading isn't the right fit at all. There's no shame in that. It's better to know yourself and find activities that match your temperament than to fight against your nature in something like trading where the costs of that fight are real money. But for many people, learning patience through trading transfers to other areas of life in positive ways. You become better at delayed gratification. You become more thoughtful in your decision-making. You learn to separate what you can control from what you can't. These are valuable life skills that extend far beyond the charts and the market. One practical tip for developing patience in trading is to deliberately practice doing nothing. Set up your charts and watch the market for a session with the explicit goal of not trading at all. Just observe. Take notes about what you see. Identify where your setup would have occurred. Notice how many times you felt the urge to trade even though your criteria weren't met. This exercise trains your brain to be comfortable with observation without action. Over time, it becomes easier. The urge to constantly trade diminishes. Another helpful practice is to track not just your trades, but also the times you chose not to trade. Keep a journal of marginal setups you passed on. Note whether they would have worked or not. You'll often find that passing on trades that didn't meet your criteria saves you from more losses than you realize. This reinforces the value of patience. It shows you that doing nothing was the right choice, which makes it easier to do nothing again in the future. The financial markets are one of the few areas in life where more effort doesn't necessarily lead to better results. In most jobs, working harder and longer generally means you'll accomplish more. But in trading, working harder can actually hurt you if it means taking more trades. The goal isn't activity, it's profitability. Sometimes the most profitable thing you can do is close your platform and go for a walk. Sometimes the best trade is the one you don't take. Understanding this runs counter to everything we're taught about work ethic and productivity. We're told that success comes from hustle, from grinding, from outworking everyone else. And there's truth to that in many areas. But trading is different. Trading rewards you for thinking clearly, for being disciplined, for having patience. You can sit in front of your computer for 12 hours and take 10 trades and lose money. Or you can watch the market for an hour, take one perfect setup, and make more profit than those 10 losing trades would have cost you. The difference isn't effort or screen time. It's selectivity and patience. I think this is one reason why many intelligent, hardworking people struggle with trading. They're used to success coming from effort. They're used to being able to solve problems by working harder. But trading doesn't work that way. You can't force the market to give you opportunities through sheer determination. The opportunities come when they come, and your job is to be ready when they do. That means having the patience to wait and the discipline to only act when conditions are right. There's a concept in trading called being in tune with the market. It means you're reading the price action correctly, you understand what's happening, and you're making decisions that align with market conditions. When you're patient, when you spend time observing, you develop this sense. You start to feel when something is different, when volatility is changing, when a trend is losing momentum. You can't develop this feel by constantly being in trades. You develop it by watching, by waiting, by doing nothing except paying attention. The best trading days I've ever had were not days where I took the most trades. They were days where I took one or two perfect setups that I had been waiting for. Everything aligned. My analysis was correct. The execution was clean. The trades worked. And the profit from those one or two trades exceeded what I might have made from a week of mediocre trading. Those days happened because I was patient. I didn't settle for less. I waited for exactly what I was looking for. Conversely, my worst trading days were almost always days where I was impatient. Days where I convinced myself I needed to make something happen. Days where I took trades I knew were suboptimal, but couldn't resist the urge to be involved. The market punished that impatience every single time. It might not have punished it immediately, but over time, the costs of impatience always showed up in my results. If you're struggling with being patient in your trading, it might help to reframe how you think about it. You're not doing nothing. You're protecting your capital. You're waiting for your edge. You're staying disciplined. You're honoring your plan. You're being professional. All of these are active, positive choices. When you choose not to take a marginal trade, you're not missing out. You're making a smart business decision. You're playing the long game instead of the short game. Trading is ultimately a game of probabilities played out over many repetitions. Any single trade doesn't matter that much. What matters is your behavior across hundreds of trades. If you can maintain high standards, taking only the setups that meet your criteria, your edge will show up in the results over time. But if you dilute those good trades with a bunch of marginal ones taken out of impatience or boredom, your edge disappears. The math doesn't lie. Quality beats quantity in trading every single time. The journey to becoming a patient trader isn't quick or easy. It goes against your instincts. It requires you to change deeply ingrained behaviors and thought patterns. But it's absolutely necessary. You cannot succeed in trading long-term without developing patience. The market will break impatient traders. It will take their money through 1,000 small cuts, each one the result of acting when they should have been waiting. But here's the encouraging part. Patience can be learned. It's a skill, not a fixed personality trait. Every time you recognize the urge to trade and choose to wait instead, you're building that skill. Every time you let a marginal setup pass by without acting, you're getting stronger. Every time you sit through the boredom and discomfort of doing nothing, you're becoming a better trader. It's hard at first, but it gets easier. Eventually, patience becomes your default mode. Waiting becomes natural. Doing nothing becomes comfortable. When you reach that point, when you've truly internalized the lesson that trading is a waiting game, everything changes. Your results improve. Your stress decreases. Your confidence grows. You stop fighting yourself and the market. You flow with the opportunities instead of trying to force them. You become the trader you always wanted to be, not because you learned some secret indicator or magic strategy, but because you learned to master the hardest skill of all, doing nothing until the moment is right.